Charlie Munger, born on January 1, 1924, in Omaha, Nebraska, was a self-made man whose life was a testament to the power of perseverance and hard work. Despite being orphaned at the tender age of 9 and thrust into a world of difficulties, he was able to channel his inner strength, cultivating a resilience and grit that would characterize him for the rest of his life. His life was not just marked by trials but also by triumphs. An avid reader, Munger's passion for knowledge saw him consuming countless books, broadening his worldview. This incessant quest for learning formed the crux of his investment philosophy, a cornerstone that would later place him on a pedestal in the world of investing. Charlie Munger wasn't just a man, he was a phenomenon. His influence reverberated through the world of investment, transforming the way people approached the subject. He had a knack for simplifying complex investment principles and making them digestible, which he often coupled with humor, making it a joy to learn from him. His investment philosophy, known as the lattice of mental models, emphasized on the importance of applying knowledge from a diverse range of disciplines to make sound investment decisions. He is famously known to have said, "I believe in the discipline of mastering the best that other people have ever figured out. I don't believe in just sitting down and trying to dream it all up yourself. Nobody's that smart." His partnership with Warren Buffett, another titan of the investment world, was a watershed moment in his career. Despite their contrasting personalities and approaches, their collaboration was more than just a business partnership. It was a friendship built on mutual respect and trust. Their shared vision and commitment to integrity and honesty were the foundation of their successful collaboration. Perhaps one of the most telling anecdotes of their relationship came from Warren Buffett himself, who said, "Charlie and I have been partners in various senses of the word for 60 years. We have disagreed on a lot of things, but we have never had an argument." This spoke volumes about the depth of their bond and their ability to manage disagreements constructively. Their joint venture, Berkshire Hathaway, was a testament to Munger's philosophy of value investing. The company, which started as a struggling textile mill, was transformed into a global financial powerhouse, thanks to their shared vision and commitment to integrity. Munger's influence on Berkshire Hathaway is felt even today, with his teachings shaping its investment strategies and defining its corporate culture. One of the significant turning points for the company was the acquisition of See's Candies in 1978. Munger understood the value of brand recognition and played a pivotal role in this transaction, setting Berkshire Hathaway on a path of investing in companies with enduring moats and strong brand value. Munger's legacy continues to resonate within the halls of Berkshire Hathaway, a company now valued at over $750 billion. His life and teachings echo in the hearts and minds of those who dare to dream and strive for success. Though his physical presence is no longer with us, his wisdom and tenacity live on. As Munger once said, "In my whole life I have known no wise people who didn't read all the time. None. Zero." His words serve as a beacon, reminding us of the importance of lifelong learning and the pursuit of knowledge. As we move on, the Federal Reserve's anticipated end to its rate hiking cycle has injected a breath of fresh air into the stock market. The S&P 500, for instance, has risen by over 17% year to date. The year ahead looks promising, with Goldman Sachs predicting a further 8% climb for the S&P 500, drawing parallels to the pre-2008 conditions. However, it's not all sunshine and roses. The Fed's expected restrictive policy until the economy weakens could potentially impact corporate margins and profitability in 2024. Increased cost of capital and the need for well-managed companies to allocate capital wisely are some of the challenges on the horizon. But despite these warning signs, the equity markets seem to have already priced in the bad news. The risk-reward profile for small caps, value, and international stocks appears more attractive than large-cap growth. While the stock market is bracing itself for a roller coaster ride, the bond market offers a glimmer of hope. The narrowing spread between corporate bonds and treasury yields suggests that the U.S. economy will not enter a recession this year or next. This revelation is a surprise to many who were expecting a downturn due to climbing interest rates and elevated inflation. In conclusion, the investing market in 2024 is a mixed bag of challenges and opportunities. The passing of investing legend Charlie Munger marks the end of an era, but his legacy lives on. The Federal Reserve's anticipated end to its rate hiking cycle has lit a spark of optimism in the stock market. However, a restrictive policy until the economy weakens could pose challenges. Despite this, the bond market offers a beacon of hope, suggesting that a recession is not on the horizon. In the face of potential volatility, long-term investors may find opportunities to thrive.